Oil jumped on the Hormuz headline. Then the panic started to fade. And that is exactly where the market becomes dangerous. Right now, stocks are trying to act like the worst-case scenario is being priced out. Asian markets rallied after Iran signaled progress in talks. Oil pulled back from the panic zone, and semiconductor names are still getting support from the AI trade. On the surface, that sounds like risk on. But Bitcoin is not confirming it cleanly. Bitcoin is still hovering around the $64,000 area. It is not collapsing, but it is also not breaking higher with the same confidence that stocks are trying to show. And that gap matters, because Bitcoin often reacts before the official headline becomes obvious. When oil fear fades, when equities recover, and when liquidity is truly coming back, Bitcoin should usually start acting stronger. But right now, Bitcoin looks cautious. That does not mean a crash is guaranteed. It means traders should be careful with the story the market is trying to sell. The first story is relief. Oil panic faded, stocks bounced, and the market wants to believe the geopolitical shock is being contained. But the second story is still pressure. The dollar is firm. Treasury yields are still a problem. The Fed is still watching inflation. And this week the market still has to deal with the next inflation signal, especially PCE. So the real question is not whether one headline is bullish or bearish. The real question is this: if the oil panic is fading, why is Bitcoin still stuck? That is the signal for the next US session. If Bitcoin breaks above the 64 to 65,000 area, while oil stays calm and Nasdaq holds strength, then the relief rally may be real. But if stocks push higher while Bitcoin stays flat, rejects, or loses 63,000 again, that is not confirmation. That is hesitation. And hesitation before the US Open is where traps are usually built. So for the next few hours, watch 4 things: oil, the dollar, Treasury yields, and most importantly, whether Bitcoin can finally confirm the risk-on move or whether it exposes this rally as another headline-driven fake-out. Because in this market, the headline creates the emotion, but liquidity confirms the truth.